In 2021, the wealthiest Americans paid an effective federal income tax rate of just 3.4%. That same year, the bottom 50% paid roughly 2.9%. The gap isn't the story. What is, how the richest legally reverse the burden of taxation? To understand this, we need to go back to 1913, when the United States ratified the 16th Amendment and created the federal income tax. The system was designed to be progressive. Those who earned more would pay a higher percentage. It seemed straightforward. But within decades, a parallel structure had emerged, one that taxed wealth differently than wages. This structure remains the legal architecture of modern tax avoidance. Here's the critical turn: wealthy individuals don't primarily make money through salaries. According to economists at the University of California, the richest 1% derive approximately 80% of their income from investment returns and capital gains, not W-2 wages. And capital gains are taxed at a lower rate than ordinary income. Someone earning $1 million in stock appreciation might pay 20% tax. Someone earning $1 million as a salary pays 37%. Both are legal. Both happen every single day. The mechanism was built into law. But there's more. When you examine how this system scales across the wealthy, documented patterns emerge. Tax deferral strategies allow investors to push gains into future years. Charitable trusts and foundations offer deductions while maintaining family control of assets. Real estate depreciation, despite the property gaining value, creates paper losses that offset taxable income. Corporate debt structures enable companies to shift profits offshore to lower tax jurisdictions. These aren't loopholes in a technical sense, tax law explicitly permits them. The law itself is the loophole. In 2023, major institutional investors including BlackRock, Vanguard, and State Street collectively managed over $18 trillion in assets. These vehicles themselves pay minimal tax because much of their activity occurs in tax-advantaged structures. The Federal Reserve, while not a traditional taxpayer, operates largely outside the standard accountability framework that affects ordinary citizens. Wall Street firms utilize carried interest provisions, allowing investment managers to classify compensation as capital gains. The entire infrastructure perpetuates itself through legal mechanism. And this matters now because the gap continues widening. Between 2010 and 2020, records show the wealth of American billionaires nearly tripled, while effective tax contributions remained relatively flat. The system hasn't changed fundamentally because the system works precisely as designed. The uncomfortable truth isn't that billionaires break the law. It's that the law was written to protect them. If you want to understand who really built these structures and why, we've created a full documentary called The Tax Architects. Link in the description.